Hello everyone, I am Amin. Welcome to BYK Book Summary. Here we decide the mindset and story of the world's most successful icon and the most powerful books that saved them. Our mission is to bring you deep insight, your personal growth, joining me to simplify this concept is my AI research co-host. Let's dive into today's journey of knowledge.
For about half a century now, a single book from a Princeton professor has been quietly waging a war on Wall Street. Its main idea is so simple, but at the same time so radical, that it is still shaking the very foundations of finance today. So let's dig into the powerful and, believe it or not, surprisingly simple wisdom of a random walk down Wall Street. And it all really boils down to this one kind of provocative question. Could a monkey, literally throwing darts at a list of stocks, actually do better than a highly paid Wall Street expert? The answer? Well, it might not just surprise you, it could totally change how you think about your financial future. So what is this big, controversial idea? Well, it's called the random walk theory, and it basically challenges the entire notion that anyone can predict what the market is going to do. It suggests that what we often think of as financial genius, well, it might just be pure dumb luck. Okay, so the random walk theory is pretty much a direct attack on the whole idea of market prediction. It argues that a stock's price tomorrow has absolutely nothing to do with its price yesterday. That huge win you had last week, or that terrible slump, according to this theory, none of that gives you any statistical edge for what's coming next. It's like the market has no memory at all. Now, to really drive this home, the author, Burton Malkiel, did this brilliant little experiment. He created a fake stock chart just by flipping a coin. Heads, the price went up a bit. Tails, it went down. And when he showed this completely random chart to professional Wall Street analysts, they couldn't tell the difference from a real one. They started pointing out all these complex patterns and buy signals and what was literally just random chance. It just goes to show you, our brains are desperate to find order, even in total chaos. And this leads us right to the heart of the problem for most investors, what we call the illusion of control. See, most people try to beat the market using one of two main strategies, and as Malkiel argues, they're both deeply, deeply flawed. So on one side, you've got technical analysis. That's the art of reading charts, looking for patterns. Malkiel doesn't mince words here. He calls it astrology. Then on the other side, you have fundamental analysis, which is all about digging into a company's real-world value. Now, he respects this approach, but he argues it's still nearly impossible to win with. And the reason why comes down to a really powerful theory about how the market itself works. Right. This theory is the foundation for everything else we're talking about. It explains why even the absolute smartest analysts, the ones with the best information, really struggle to consistently do better than average. It's called the efficient market hypothesis. So what does that actually mean? Well, put simply, the theory says a stock's current price already reflects all the publicly known information about it. Every single news story, every earnings report, every expert opinion, it's all instantly baked right into the price. There are no secret, undervalued gems just waiting for you to find them. Here's the bottom line. That brilliant insight you just had reading a financial report, thousands of other investors had it seconds ago, and their computers have already traded on it. The price is already adjusted. The collective hive mind of the market is just, it's always faster than any one of us. Okay. So if trying to predict the market is basically a fool's errand, what on earth are we supposed to do? This is where Malkiel's work gets so incredibly powerful. He flips the script completely, moving away from the chaos of prediction and toward a solution that's elegant, simple, and patient. And the hero of this story is something called the index fund. Instead of trying to find those few winning stocks to beat the market, an index fund just buys all the stocks in a major market index, like the S&P 500. The goal isn't to beat the market, the goal is to be the market. Malkiel's advice is really captured perfectly in this one simple idea. Stop spending all your time and energy trying to find that one magic stock, the needle. Instead, just buy the whole haystack. Own a tiny piece of the entire economy and just let its long-term growth do the heavy lifting for you. Now, I know what you're thinking. This all sounds great in theory, but where's the actual proof? Well, the evidence is pretty overwhelming, and it really comes down to three things: costs, the magic of compounding, and a very public million-dollar bet made by the world's greatest investor. Let's start with this number because it is just staggering. Study after study has shown that over long periods of time, somewhere between 80 and 90% of actively managed funds, the ones run by those experts we talked about, fail to beat their own simple benchmark index. Think about that. They charge you a premium to underperform. And hey, if you need any more convincing, just listen to Warren Buffett, probably the most famous active investor of all time. Back in 2007, he made $1 million bet. He wagered that a simple, low-cost S&P 500 index fund would beat a hand-picked portfolio of sophisticated hedge funds over the next 10 years. So what happened? The results weren't even close. The simple, boring index fund absolutely crushed the fancy hedge funds. It was a huge, decisive victory for Malkiel's degree of simplicity. And this whole thing reveals a really crucial truth. Your biggest enemy as an investor isn't picking the occasional bad stock. No. Over a lifetime, the single greatest threat to your wealth is something way more insidious: high fees. A 1% fee sounds tiny, right? It sounds like nothing. But over 30 years, the power of compounding turns that tiny fee into an absolute monster that just devours your returns. The difference between a low-cost fund and a high-cost fund isn't just a little extra cash. It can literally be the difference between retiring comfortably and not. So, when you boil it all down, Malkiel's philosophy comes down to a few really simple, powerful principles. First, own the entire market through low-cost index funds. Next, stop trying to time the market's ups and downs. Just invest consistently month after month. And maybe most importantly, learn to measure your timeline in decades, not in days. It's a strategy that's all about patience, not prediction. And all of this leaves us with one final big question you have to ask yourself. Is your goal to play a game you are statistically destined to lose, constantly trying to outsmart millions of other people? Or are you ready to just harness the incredible power of the entire market, put it to work for you, and patiently let it build your future? The choice, as Malkiel shows.
So, friends, those were the powerful insight that can truly transform your life. Remember, growth doesn't come from the just listening, but from applying this lesson. If you want to get 1% better every day, make sure to subscribe and follow BYK Book Summary. I am Amin, and I will see you in the next episode with another incredible story. Until then, read more, think deeper, and live with meaning.